Welcome Iron Minds to the next video, and this video is going to be about order blocks because this has been the most requested video, and that's why I'm going to give you a full video just on understanding how order blocks actually work and how to really identify them. So let's start. Now, first of all, let's have some general information. So order blocks represent a change in the state of delivery in the market. In the context of a bullish order block, it is defined as the lowest candle or price bar with a down close that has the most range between open to close and is near a support level. So what does that actually mean? Order blocks are so simple. So order blocks are just, let's say you have a bullish price action. So every candle is just going up. Now, every down close candle that we have during this bullish move represents a bullish order block. So every time we have a candle going down into this down close candle, it will show a reaction to the upside. So it will maybe go to 50% of it, but more to that later, and then wick off and trade even higher. So order blocks just, support price during a bullish move or a bearish move, and it gives you more confirmation. Order blocks can also be traded separately as a whole model, but most of the times I myself use it just as confirmation while being in a trade, and it shows me just that I'm on the right side because my order blocks gets respected, but more to that later. Now let's see how we can identify these order blocks, and it's very simple, as I said before. Now every down close candle while price is bullish is a bullish order block. So every red candle you have when price is just spooling to the upside is a bullish order block that price will retrace into to show some great reaction to support it and trade even higher. And a bearish order block is every up close candle while price is bearish. So while we have a down move, every up close candle represents a bearish order block. So price will trade up into them and then sell off even lower if we have a bearish price action. So not every bearish move, it's about, let's say, higher time frame aligns to, and we have a very bearish bias. Now we can expect these order blocks to form on higher time frames, and then if we drop down on lower time frames, they could be there too. And when you're in position, you're short, you'll be looking for them and how price reacts of these levels. Now here you can see a chart example. So what do we see here is very simple. We are bullish. So as you can see, price is just going up. So it's trading higher and higher and higher, right? And now here you can see perfectly, we traded up and then we created this big down close candle here. And what did I teach you before is that every down close candle while price is bullish is a order block, right? So here you can perfectly see that price retraced down into this big candle right there and also into this breaker right here. So you have double confirmation that price will show some great reaction off of these two bullish PD arrays, and you can see the body is perfectly respected the high of this order block and this breaker right there, and showed, as you can see here, perfect reaction to the upside, right? And that's also something you gotta think about and look for, is having something else support the order block. So in this case, this low, high, lower low, so this bullish breaker supports this bullish order block right there, and price just cannot trade below it because we also have this big busy right there, sort of rally gap, so everything speaks for longs, right? So this is also a trade that I took, and this was a higher time frame trade that I took, because these things mostly form on higher time frames and then show some great reaction, because you cannot go into a 1 minute chart and look for these things, because 1 minute is just, mostly not going to respect these PD arrays, because they are not as, dominant and as important as they are on a higher time frame, because higher time frame moves the markets, and then you just look for a setup on a lower time frame. So that's why I look for these things maybe on a 15-minute to 1 hour chart, and then you can look for longs in here in a 5-minute chart, for example, 3-minute chart, and that's how I would utilize that. Now here a bearish example. Now, as I said, every up close candle during a bearish move on a higher time frame represents a bearish order block, and here you can see we perfectly sold off, and then we had this small up close candle right there. Price retraces up into it, respects the whole body, and then wicks off and trades even lower, and that's a bearish order block. And you can see the reactions off of these order blocks is like, they are so accurate, especially on a higher time frame. This is all higher time frame, and higher time frame moves the market, and that's why when price trades into a higher time frame order block, you can be sure that it will react off of it and give you a setup on a lower time frame. Now let's talk about the key levels, because there are levels to every order block, right? And for this example, I took a bullish up close candle, so we can see that as a what? Exactly, as a bearish order block. So when price is just going down, every up close candle represents our order block. And you can see perfectly that if you drag your fib from the low to the high, and you have these settings on, so 0.25, 0.5, and 0.75, you will get this. And now you have important levels to the order block. Now, most of the times, price will trade to the 50% level, so 0.5, which is also called mean threshold. And when price trades to this 0.5 level, you want to see an accurate and fast reaction off of it. Because if we go to the 75%, for example, you will be most likely wrong, and it will, disrespect the whole order block itself, right? But if we just trade to the 0.25% or 0.5% or between that, it is a good sign that this order block is valid, and it will show a great reaction off of it. So mark out your order blocks like that, and you will see a drastic change on your understanding on like where price is really at in the order block. Because once you say like price traded into the order block, what does that mean? Like, where is it? You need to know that. So mean threshold is the best and the sweet spot, and from there you want to see a great reaction, especially on a higher time frame. So that was the video about order blocks, and I hope you learned something new and how to identify them. And it is really important that you just now go into your charts and back test that and look for it. Look for how it reacts off of it, and always remember, higher time frame rules the market.